Hello and welcome to the weekly wrap video. Quite a few things to catch you up on then. Over the past 5 trading sessions it's been relatively busy. We've had a big pickup in volumes, particularly towards the tail end of the week as we saw a very sharp sell-off in both US and European equities. Now there's no primary catalyst or headline that we could have attributed this to invoke the very sharp sell-off in stocks on both sides of the pond. However, as we head in towards the close of the week, it appears some details are emerging out of the fog to give us a bit of a clearer picture. On Friday there were source reports that Blue Crest Capital, the third largest hedge fund in Europe, had a bit of a shake-up of its US equity department, actually involving a number of departures of a number of key US equity traders, just as the firm themselves were in the middle of a big period of US equity expansion. As such, the departure of these traders also meant a liquidation of their US equity positions, which was in fitting with rumours that were circulating on Thursday. The large equity ETF allocation was responsible for the sharp downside we saw in equities. Other than this though, we did also see a lot of weight going through in Apple shares, which are often seen as a bit of a bellwether for the broader sentiment towards US equities. Of course, on the rather now widespread reports that their new iPhone 6 and iPhone 6 Plus has an unintended feature of bendiness. But moving on elsewhere then, on the macro side of things, Chinese growth concerns really dictated the state of play in the early days of the week. Commodity prices across the board were very heavily weighed upon by not just evidence of waning growth over in China, but also the resounding surge in the US dollar, which continues to claw higher, just on Friday hitting multi-year highs against the euro, which has broken below 127 for the first time since 2012. Now, much of the dollar's incline has been due to the market eyeing the policy divergence between the ECB and the Fed, as the Fed are expected at their next meeting to conclude their QE3 package, whereas markets do continue to believe that ECB's Draghi will be pushed into a corner, at which point he will have to conduct QE in order to avoid a deflationary spiral for the Eurozone. Finally, this week we've had a bit of a change in the takeover laws between the US and other multinational companies. The US Treasury have looked to disincentivize multinational takeovers by making the benefits of shifting tax headquarters slightly more negligible. This did initially weigh in on the likes of Shire, AstraZeneca, Smith & Nephew, some of these previous bid targets that would have been taken over as part of a tax inversion play. However, these shares did see some downside, but this has actually somewhat recovered, as we have seen reports that the likes of AbbVie and Pfizer are not put off by the latest rulings out of the US Treasury. A quick look ahead to next week then, we have some key central bank updates, the Bank of England rate decision, the ECB rate decision, as well as, of course, non-farm payrolls on Friday. Of course, we'll bring you all those releases as soon as they hit the wires, as well as any other relevant commentary to your trading. But in the meantime, that's all from me. Make sure you have a fantastic weekend.